balance trader, and yeah, things are a little bit different here. I've made some changes to the way we're going to run the live blog. It's no longer running through Evernote because that's not sustainable. So please have a look at the link below. That's something new. We will now be running through things through WordPress. So you're very welcome to follow my journal there. If you still want access to my Evernote notes, just direct message me, and we can arrange something there. But yeah, me copying links every day it's just getting tiring. So I need to find a more efficient way of doing it. So yeah, and I'm running late again because I'm trying to get this all set up. So thanks for your patience. Anyway, let's just quickly cut into yesterday's moves. What happened yesterday? So I'm going to just quickly bring up my notes. No, that's not it. And there we have them. So before we go into what happened yesterday and the notes, we've had a bit of data. We've had the usual Thursday data, and we've just had some important information coming out of Microsoft that has sent the S&P down slightly. So I think downward revisions to the next quarter due to FX. So we're moving into the open with a slight negative sentiment, I think. Just looking at where we are and what's been going on. So let's start with yesterday. Okay, what were the key things and key takeaways from yesterday? Let me just bring this up, make it big for you guys, and put it on the screen for you guys to see. Okay, so these are in my notes that you're able to access, and please do take from them what you will. This is my own analysis. I try to base it on objective information. So yesterday, key takeaway for me on the open was this little open rejection. We failed to break above the prior day's highs, and basically it was just a few stops going off through the overnight range, which is why I included the overnight, because it was just such a dense little distribution that a push above, there were likely to be stops, weaker hands, and the same applies below. So what happened was that we opened just below, we pushed back up, opened the floodgates when all these stops went off. We failed to take out the previous day's highs. So then when we reverted back through the opening price, which I think was 54, then we got a continued sustain. That's a sign of weakness, because when you're looking, when you sort of get an impulse up like that, you want to see if it's sustained. As soon as it comes back through the opening price, you've got to start thinking that maybe the longs don't have it. So we failed to hold a really important area. The open was right around where the previous week's settle was, so it was quite important. So we basically looked above it and then fell back through. So we created a high at 65, and then we slowly moved back, and we were rotating and holding in a choppy range, which is between these two little circles here, where we did quite a bit of volume. And what's important about that was that this zipper, this chop zone, it was quite big, so I won't call it a zipper because it's quite big. This chop zone was basically trading underneath the previous week's settle, so I think that's quite important. So I was starting to think bearish. So one was the rejection, they opened above the prior overnight session's highs, the pullback through, and then I'm thinking, okay, well that's not good. We had an impulse higher, so longs aren't as strong as they they should be, given the fact that we've just broken. We didn't manage to break above the previous day's high, so that's another sign that buys weren't that strong. So we're thinking, okay, we're not thinking long short here, we're just thinking buys are weak, or weaker than they should be if we wanted an extended move higher. So at this point we've got this chop zone below the previous week's settle, which I think is important, and then we liquidated through it, and then we created this little vacuum where we just created a lot of singles, and we moved really quickly down to the century figure at 4,100. You can see here I've highlighted on the left hand side. Hopefully you can see my little mouse wiggling. Just at the bottom of these singles here, which, you know, this is where you can sort of take some really good information from prior auctions, and you can you know, find some areas to you know, base your trades around. So we moved that down to the 4,100 area. We found a bit of support, and then once we broke that, we were targeting the gaps that were left off over from the auction on 27th of May. And, you know, this was expected. We spoke about it, well, I spoke about it in my notes yesterday, how this is an area where, you know, it's a bit of an over under. It's marked out in my overnight, my weekly planning. So again, you've got to be aware of your weekly picture, your monthly picture. Where are we in the bigger picture? Where are we on the map? So we got down to, you know, this area which I deemed a bit of an over under area, because, you know, the longs want to maintain that gap and shorts want to close it. So basically it's going to get defended, and that's what happened. When you've got buyers and sellers both fighting for price, you're going to have chop, and that's what happened there. So this is how I use market profile also to help me gauge where chop zones might be. They tend to be in areas where we've got lots of singles, lots of gaps, because, yeah, they're just really important visual reference points as well for the market. Anyway, I haven't got too much time. I want to try and get a bit of more out on CT. So my plan for the day is we're in this 3-day balance, which is all this area here. We've had the, you know, we've just come back off the back of the holiday where we saw some overnight highs or Monday highs, and they were quickly pulled back in this little auction here where we had, I called it buyer's regret, which is often the case when we have holidays. So check out my links for trading holidays. I misspelled holidays, apologies. Holiday. Anyway, as we came back, we had some passive buys on that gap low, and then we've pushed back high, but we're managing to contain the auction within yesterday's lower distribution. I didn't mark it out yesterday. Oh, I did actually. There it is. Bit of a tough one here. A lot of people would look at this and think that this is a B profile. I don't think it is. I'm welcoming people to give me their answers as to whether or not it's a B profile. I think B profiles are slightly different than that. I won't say what it is now because I've asked anybody to comment, and we can have a chat if you get the answer right. Okay, so what am I looking for? I'm looking for a break below these 71s from yesterday. I'm looking for, you know, some strength for buyers to push the auction up and above this area where we've got these singles here. So between 28.30 and 41, I expect this to be quite contested here, filling in this gap on the composite profile on the right hand side, and then if we manage to hold that area, that could be quite interesting. And then we're looking for the spike base from yesterday, which is basically the open, the open, and this little singles marker here. I've done a blog on how to trade singles. I need to maybe polish it up a little bit, but all the basics are there, and basically feel free to go and have a look how I trade spikes and spike bases. Jim Dalton coined the term, I think, spike rules. So I apply spike rules to those instances. So feel free to go and check out the blogs on that. You'll find them in the same place you'll find today's journal. So the journal will now be in WordPress. I'm very excited about that. Hopefully we can gain some traction there. Hopefully people can leave comments as well if they think that I'm doing a good job, bad job. I'll welcome any criticism. I'm a little bit new at this. I'm trying to create a lot of content and also structure a product that can best serve you guys, the viewers. my objective is to try and to pass on some of my experience and the things that I've learned along the way into becoming into being a trader of 20 years, and also my journey as a discretionary trader, which has been less than easy. So there's no get rich schemes. I don't believe in them. I never bought Bitcoin. I don't believe in it. But there was a lot of money to be made. But I have had a steady career over 20 years, and it's had its peaks and troughs. And hopefully my troughs as a discretionary trader are behind me, and I'm putting in some structure to maintain a positive trajectory, which I have been doing for quite some time now, since I actually been a member of the Convergent community. So big shout out to them. So I think I'm going to miss his stream. Anyway, Morad Asghar has got a fantastic stream for day traders looking to use volume profile, market profile. Feel free to go and hit his YouTube channel. I should put a link in it somewhere. I need to ask for permission first. What else for the day? Okay, so I've outlined where I'm looking. If you break these 71s, my targets are quite clear. I think that we've got like this. We've got these singles here from we've got these singles left over from before, which are marked out here at 30, and given the day's range, that's quite easily attainable. That's 40 points, and then the higher, my big target is this 15 area here, right at the bottom where we've got this high volume node. So a break to the lower, I'm looking at trading in the 64 40s area and down to 15s. I'm going to monitor the auction, obviously, but I'm going to make sure I try and get some scales out so that I can cover my risk and run my winners. On the upside, again, we're looking to close the gap to the previous open, where we have a spike base, then breaking up above it, and then really we want to be targeting this 4202 area where I think is a very nice round number. So I think that's a good target. Well, this is an area we've traded on the holiday rally, and that area hasn't been traded in the full session yet. Okay, so that's basically it for today. I'm going to leave it. Please check out the link on the blog. That's where I will be doing all my shizzle, all my stuff. I think it's a bit cleaner as well. It's a lot of effort for me. I need to find a better way of doing it. It's really not that easy to journal in WordPress, but I need to create some templates, which I will do hopefully soon. But I will still be trading live, so I'm going to cut this off and then revert back to the live stream. Although I have to be honest, I'm going to be trading the first 10 minutes and then walking out. It's half-term holiday. I have some kiddywinks that I need to attend to, and they are calling for me to come and play. So I'm not going to be trading this afternoon, and I won't be trading tomorrow. But I will be doing my blogs, and I will have the stream up. I will try to do the opens. I think tomorrow I'm going to have a go at doing the European session. I don't know if Friday, no auctions, nothing really exciting, I don't think. But it is non-farm payrolls, so I will try to trade non-farm payrolls and then walk away. So I'm going to leave it at that, just to know where I am or what I'm doing. Hopefully you can hear me clearly because I've been talking far too far away from the mic. Anyway, ping me with a message, ping me with some ideas. I hope to help you guys get through the trading day with my notes and debriefs and my live info on my live stream. Okay, I'll leave it at that. Waffling again. I do like to waffle. Okay, right. See you in a bit. I'm just going to go and have a cup of tea. I've got 8 minutes. Right, bye.